And we do have longtime Tesla bear Ryan Brinkman of JPMorgan getting slightly less bearish and raising his price target on shares of Tesla to $75 per share. That's up from $65 previously.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. If you're JPMorgan, can you guys please just stop publicly embarrassing yourself by being so wrong on Tesla stock for so long? It's just shameful. Like, just give up, wave the white flag and say, you know what? We don't know anything about Tesla stock, so we're going to stop covering it. That'd be a really wise idea. But until then, I'd like to discuss JP Morgan's latest Tesla price target. So let's get into the video. But first, hey guys, if you're in the US and you'd like to help out the channel and get a free stock, check out the link in the description to WeBull. If you open a new account and fund it with $100, you'll get a free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
Let's talk Tesla right now. One analyst at JP Morgan has lifted their price target on that stock. So for more on this, we're joined now by Yahoo Finance's Emily McCormick. Hey, Emily.
Hello, Kristen. And we do have longtime Tesla bear Ryan Brinkman of JPMorgan getting slightly less bearish and raising his price target on shares of Tesla to $75 per share. That's up from $65 previously. Now, he did maintain his underweight rating on the stock. Keep in mind that the stock is currently trading around $420 per share. So that price target does imply downside of about 82% from Friday's closing price.
I just want to take a quick pause here and let that sink in. The Tesla stock price target needs to see about an 80% downside from Tesla stock's current price, okay? This isn't just a minor slightly bearish, oh yeah, you know, it needs to come back 10, 20%, even 30%. No. Let's continue. I just can't even.
Now, the average analyst price target is about $313 per share, according to Bloomberg data. So JP Morgan, one of the more bearish on the stock, that $75 price target among the lowest here on Wall Street.
This is some Gordon Genius Johnson level shit right here. I mean, absolutely absurd, truly unbelievable. You know what? Let's see, what have they had to say about Tesla stock in the past? Maybe there's a recent change of tune, because surely you can't be incompetent for that long and reassess your thesis. If you've got one of the lowest price targets on any stock in Wall Street, it's probably worthwhile taking a step back and asking the question, wait, why is my price target so absurdly low compared to everybody else on this stock? Am I missing something, or am I really sure about my research? Am I really strong in my position? What's my track record like on this stock? Have I been right in the past? Let's find out. All right, here we are, January 2015. JP Morgan cuts its price target on neutral rated Tesla Motors from 190 down to 180 as crude prices continue to tumble. We'll check back in and see what the Tesla price was at this point in time in just a moment. I'm going to scroll down. Got a bit of a prediction here. We now forecast 2019 deliveries of 140,000 units versus 160,000 units prior, and 2020 deliveries of 180,000 units versus 200,000 units prior for the Model 3. So, how many units did Tesla deliver of the Model 3 in 2019? That's a great question, Stephen. Here we are on HyperCharts. How convenient. Oh, wait, 300,000 Model 3s, right. So more than double their 2019 target delivered in 2019. So I think it's fair to say that if JP Moron back in 2015 were estimating Tesla deliveries of Model 3 in 2019 to be half of the actual number, at some point during that intervening interval, they've probably changed their tune and realized they'd made a mistake, an error of judgment in analyzing Tesla stock, right? Let's see what their ratings have been on Tesla stock over the past few years. All right, guys, here we are. This is approximate. January 16, Tesla stock $38 split adjusted. Since then, it's up approximately 1,000%. Just saying. Well, that's kind of awkward and embarrassing, but hey, nobody's perfect. Everybody makes mistakes and errors in judgment. So they've had 5.5 years to figure out maybe they weren't seeing Tesla for what it really was back in 2015. So maybe they've changed their tune. Let's head over to tip ranks and see Ryan Brinkman's profile. What has he been suggesting people do with Tesla stock over the last few years since they made this call, which was clearly an embarrassingly bad one? Nothing like tip ranks to keep these analysts accountable. Hey, whoa, holy, 1 star out of average return over the line, minus 1.5%. Oh, hang on. What has he got to say about General Motors? He's got a buy rating on General Motors at the moment. Is this real life? This guy, he's actually recommending people buy General Motors? Holy shit. Maybe he's just changed his mind recently. Let's have a look at his history, his rating. Are you fucking serious? He's had a buy rating on General Motors since 2012. The entire time. On a company that's headed for imminent bankruptcy, in my opinion. This doesn't look right. The entire time a buy rating. Okay, cool. Well, each to their own. You guys are welcome to go buy GM stock as well. I'll be here in a few years to cover their bankruptcy and what went wrong and how it was obvious years prior. But anyway, each to their own. How about his Tesla stock recommendations? Okay, so the span we're looking at here from 2018 till present, sell ratings the entire time. That's very embarrassing, isn't it, Ryan? I'm going to wind this back a little bit further. Maybe this coverage is from another JPMorgan analyst. I'm not sure. Hold. And then after Tesla did nothing, Tesla stock pretty much did nothing for a number of years, they began to suggest people sell it. Meanwhile, I'm buying like absolute mad the entire time because I see what's headed over the corner here. Obviously, it's coming. Stock's done nothing. Revenue keeps going up. Deliveries keep going up. Production keeps going up. Awareness keeps going up, costs coming. Okay, well, you guys are recommending sell, I'm recommending buy. How did that work out? Now, maybe I'm just thinking out loud here. I could totally be off the mark, but they've had a sell rating on Tesla unchanged for half a decade. While you've seen what Tesla's done over the last 5 years. They can't be serious, right? How does this guy have a job? People need to be accountable. You can't be this fucking wrong and still have a job and still have any influence or sway. Just look at this. It's self-immolation. There's no other word to describe it. It's just like, hey, look at me. I'm just going to punch myself in the face repeatedly and be completely wrong over and over and over and over again. Yay for me, I'm really smart. So now that we've established the acute lack of credibility JPMorgan have when discussing Tesla stock, and by the way, Ryan Brinkman, just between you and I, you may understand automotive manufacturers. I don't know. I don't really know a whole lot about you. I don't follow analysts who aren't very good at analyzing the stocks that I personally care about. So nothing personal, just these are the facts. Maybe a suggestion, you should probably just stop covering Tesla and just stick to the stuff that you know, because clearly Tesla is not one of those things that you know. Anyway, let's carry on with the video.
Now, this raise nevertheless comes in light of Tesla's record third quarter delivery figures, which, as we know from last Friday, were at 139,300 and did top Wall Street's expectations. Now, we did see the stock sell off a bit last week. That stock down 7% on the day.
Let me know in the comments below, guys. Were you one of the people that was selling stock after they once again posted record deliveries on the tail end of a global pandemic? Or are you one of the people that instead was buying Tesla stock after it sold off after they once again reported record deliveries again, just after a pandemic? Just asking. I'm just curious. Let me know in the comments below.
We are seeing a little bit of dip buying here, a bit of a rebound also in light of this price target raise that we had from JPMorgan. Also want to note that in this note from this morning, we had JPMorgan raising its forecast for 2020 total deliveries to come in at nearly 482,000 for Tesla. That's up from about 467,000 that they estimated previously. Now, that would still be on the lower end of guidance that Tesla CEO Elon Musk had suggested at the company's Investor Day in September, when he said deliveries would grow between 30% and 40% versus 2019 to imply deliveries of as much as 514,500.
Show of hands in the comments below. Do you believe that JPMorgan's estimate for Tesla's 2020 deliveries will fall below or above what Tesla actually delivers? Let me know. I have a funny feeling they're probably going to be below, just quietly. I mean, given their track record and their credibility, I don't know why on earth I would suggest that they're probably going to be wrong to the downside once again on Tesla's stock and deliveries and everything else they ever utter about the company. But I don't know. I need you guys to help me figure it out because I'm not smart enough to sort of make this call myself. I need your help. What do you think is going to come out of this? Will they be right? Will they be wrong? Now,
finally, do want to note that JPMorgan also introduced for the first time a 2022 deliveries estimate of 768,500 and earnings per share for that year of $3.35. It's still quite a bit below that $4.78 consensus estimate we have here for earnings in 2 years on this company. But something also to note now that we are getting these estimates out of JPMorgan. Now, again, we do see that stock trading just a bit higher, up about 1.4% now to $421 per share.
So guys, I hope you found this video about JPMorgan's Tesla stock price target insightful at the very least. I just can't let these clowns get away with being completely wrong for an extended period of time and not calling them out. JPMorgan is a company with a lot of sway. A lot of people go, oh, I know that name. I'm going to believe what they say. Oh, great idea, by the way. If you want a bit of a laugh, get on Google. Wasn't that long ago, this firm, not this analyst, but this firm came out in support of, wait for it, Nikola. Yeah, that Nikola. Yeah. That Nikola. Yeah, I'm not making this shit up. Get on Google, have a look for yourself. So, a little bit of food for thought. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and Stake using the links below. Deposit $100 in your WeBull account, you'll get a free stock valued up to $1,600, and Stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.